Hello everybody, this is Alexander Nikolov from trendrecognition.com. Today I'll discuss the prospects before the US stock market. This is the chart of S&P 500, and as you can see, on Friday we have a key reversal day after the heavy selling pressure that we saw for the past couple of weeks. Finally, on Thursday we got a real panic on the market, a real panic washout low. Actually, this didn't turn out to be the low, but the low was recorded on the next day. But last Thursday, on this heavy selling, there was a 90% down day, which means that more than 90% of all stocks were down for the day on both Nasdaq and New York Stock Exchange. For New York Stock Exchange, it's not exactly 90% down day, but if you consider only the stocks that are normal stocks, but not ETF on bonds and other securities that are listed that actually are not stocks, you also had a 90% down day. VIX spiked above 45. I'll show you the chart of VIX in a moment. And then on Friday, the market opened sharply lower and then reversed higher and closed near the highs of the day. That's a key reversal pattern. So what's more, if you look, what I've been looking for here for a long time was a flat or triangle formation from the February low. So we came close to the February low. So this is exactly what I was looking for. And after the panic selling on May 6th, I was writing in my updates that the market should eventually retest this May 6th low. That some say it was artificial, but finally the market proved that and went to that level. What's interesting here is that Nasdaq, if you take a look at the chart of the Nasdaq index, you can see that Friday's low was higher than the May 6th low. Again, there was a clear full retest on that low, but Nasdaq was showing relative strength on this last leg down. So that's kind of a positive sign. What's negative a bit is that if you go back to the chart of S&P 500, you will see that this pattern here from May 13th high is not complete, does not look complete. So maybe there will be some rally this week, followed by another retest of the 1060 area, but eventually I expect the market to go higher and test at least the 1135 area, if not the higher level at 1182. Let's take a look at the chart of VIX index. You can see the volatility is in a clear uptrend, which is negative for the US stock market. But there was a spike in VIX last Thursday and Friday, and if the VIX declines this week, actually it needs to decline below 2028, where the 20-day moving average is, which is quite a bit on the downside. But if it manages to decline below that level, there will be a confirmed spike in this index, so that will be again somewhat bullish for the stock market. So what this chart tells us that we had a real panic on the market in the last couple of days with VIX above 40. That, as you can see, happens quite rarely historically. So that's a good sign that this panic could eventually lead to a higher prices in the next several months. Going back to the chart of S&P 500, how one can approach the market right now. As you know, in our hypothetical trades that we discuss, we considered a short position here from 11:45 and then closed this hypothetical trade at 10:75, and now it appears that the market is has either bottom or is bottoming out, that one can favor a long position here, particularly if another retest on the 1060 area is seen for this expected move higher toward 11:35. So that's all from me for today. I hope this explanation clears my views on the market, and I'll be talking to you later.